JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 27th of May 2020, so yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, and it'll take you to this page, which I believe you can find useful. Now then, let's quickly have a look at what's happening here. So yep, we've got closer to the 5,600,000 level. Let's have a look at daily cases. Yes, the daily cases have risen a little bit, so at the moment it seems like, yes, it continues to move in a way as sinus cosinus, and well, let's see if this can actually if it won't go up too much to the upside here. So so yeah, let's continue monitoring the situation. I doubt that we could reach 6 million this week. However, of course, yeah, let's continue observing the situation. Now, jumping into the first index I wanted to quickly touch on, and I looked at this one yesterday, Nikkei 225. Basically, this one continues to push higher, and today it moved further north. Now, looking at the picture here, you can see that it managed to climb above its 200-day EMA, which could be seen as a nice positive sign here. So, but the index kind of found good resistance near this high, near the high of the 5th of March, and that's roughly around the 21,400 zone. So although it is currently slightly above that, let's see if it can continue pushing further north. However, our next target, initially what I was talking about when I was covering Nikkei, when it was still here, what I was saying that our target for now would be somewhere around the 21,720 zone, which is the highest point of March, and then we would take it from there, because until then, I mean, it already had a nice rally here to the upside. So let's see if it can get a hold up near this barrier. If that barrier fails to withhold, of course, then yes, higher levels could be met, but we'll reevaluate everything then. For now, yes, we are a little bit more bullish than bearish, but we will only target the 21,720 zone, which is the highest point of March. Jumping into DAX, so the German index yesterday closed nicely above this upper side of the range. It remained above this upper side of the range, and also it closed above this other barrier that I talked about, the 11,447 zone, which is the low of the 6th of March here, and in a way this could continue pushing further north. I mean, looking at the cash index right now, we can see that yes, it is doing exactly that. It is making its way higher, and getting closer to this 200-day EMA. So but what I was mentioning previously, that for now we will only target the high of March 6th, which is roughly around the 11,770 zone, and slightly above that we do have this 11,845 zone, which is the low of the 5th of March. So basically for now we will target only this area. We want to see how it's going to perform around here, and if this area is going to provide decent resistance, then we may see maybe a bit of a correction to the downside. So basically, in other words, something like this could be possible here. And then we could maybe aim for the upside again. But again, like I said, for now, from the very short-term perspective, yes, we are leaning a little bit more to the upside. Initially, we'll be targeting this 200-day EMA or the 11,770 zone, marked by the high of the 6th of March. So keep your eyes on that one. And yep, let's see how this is going to play out. However, if this suddenly starts falling back down and drops below the 11,235 territory here, well, I mean, it's going to get back into this previous range. Then yes, we will aim for some lower levels, but for now only for the for that time only within the lower levels within the range. So basically the main target would be the lower side here of the range near the 10,280 zone. But of course, like I said, that's going to be only if we're gonna see a drop below this 11,235 mark. So keep your eyes on that one. Brent oil. So Brent oil yesterday kind of stayed still near this 36.10 level. I talked about this one, and as you can see today, it continues to balance around it. Basically, it violated the downside line, this medium-term downside line taken from the high of the 8th of January, but it's not really kind of getting this attention from the bulls as we would like to see. But the positive aspect from all this is that it's still balancing above this short-term upside support line taken from the low of the 22nd of April, and in a way, for now, we will stay somewhat bullish, but of course ideally we would like to see a stronger move above the 36.10 zone. And then yes, the next target for us is the high of the 11th of March near the 39.60 zone. Of course, if that fails to withhold, then yes, higher levels could be met, but let's keep it short and simple. For now, all eyes are on this upside support line and this barrier, the 36.10, which kind of continues to provide resistance. But well, for now, like I said, let's remain cautious. In terms of the downside, if this upside line breaks and the price falls below the 32.20 zone right here, then yes, we could start considering lower areas, and because this would also place the price below the 21-day EMA, and yep, maybe more sellers could be joining in here. So for now, of course, the downside is slightly off the table. We're leaning a little bit more to the upside. However, we would like to see a nice, good, stronger move above this 36.10 zone. So let's keep an eye on that one. Gold. So gold finally managed to drop below this area here, this 1723 zone. I talked about this one, and yep, it drifted lower and it pushed below this 21-day EMA. So now when I've mentioned this one in the beginning of this week, I was telling you guys to keep a close eye on this barrier, the 1723 zone, because if it gets broken, then, and if we see a daily candle dropping not only below it but also below the 21-day EMA, this kind of increases the chances of a potential further slide. Now, of course, what I was also saying, that the next target for us is around that psychological 1700 zone, but the probably more interesting area for us to consider as a good potential area of support could be around the 1680-81 area level. Because as you can see, it acted as very good support here back in the beginning of May. So let's see if it can do the same trick this time. So, but again, for now, like I said, we are leaning a little bit more to the downside. However, not far, only up until this 1680-1681 zone. In terms of the upside, for us to now look at higher levels, well, we would probably wait for a push above the highest point of April near the 1748 territory, and then aim for higher levels. Until then, the upside for us, well, we wouldn't really get comfortable with higher levels until we see that break. DXY. Now, DXY, I talked about this one this week, and basically I was saying that we were still neutral because we were basically hanging in the middle of this range, and as you can see, yesterday the dollar index sold off here and drifted lower, but found support near the 98.89 zone, and this was one of the levels that I talked about, this highlighted area. So it found support near this highlighted area and kind of rebounded a little bit today, this morning. But as you can see, it's still kind of sitting below the, or should I say, bang on the 100 EMA here on the daily chart. So in a way, for now, we're going to be very careful. For us to consider lower levels, we would prefer to see a nice, good, strong move below the, not only the 98.89, but also the 98.82 territory, which is marked by the low of the 15th of April. Of course, don't get me wrong, we do have the next potential area of support right here, the 98.57, which also currently coincides with the 200-day EMA. So if you're more on the cautious side, you could basically just wait for a drop below the 98.57 and then aim for lower levels. For those who are more on the risky side, we could start looking at lower levels if, like I said, we start moving below the 98.82. But of course, don't forget that, don't exclude the possibility of seeing maybe a false breakout. And if, let's say, this breaks lower, but the daily candle still ends up being above this highlighted territory here, then well, I mean, yeah, we would get ourselves a nice false breakout, and basically the bulls could try to push this one back to the upside. However, like I said, for now we're closer to the lower side of the range, and as I said, for those who are more on the cautious side, you could keep an eye on this level, the low of the 4th of May, or in other words, the current lowest point of May, near the 98.57. A nice good drop below this would confirm a forthcoming lower low. That's first, and yep, the second, it would place the price below the 200-day EMA, which maybe some bears could see as a good opportunity to kind of good moment to step in. Ethereum, just a quick update on Ethereum. I've talked about this one, and mainly I was focusing on the 4-hour chart because in the beginning of this week I was telling you guys that the pair, well, the crypto is kind of coiling up here a little bit, and as you can see, yep, it continues to do so. Yesterday did kind of, this is where the little problem comes in. So yesterday it drifted below this little triangle pattern, and kind of broke below one of the levels that I talked about, the 198 territory. It dropped below this and moved. It seemed that it wanted to move lower. However, as you can see, the bulls quickly pushed it back up, and this is where the idea of keeping an eye on the daily candle as well, this is where it came in nicely in play. So because as you can see, we had our false breakout here, although on the 4-hour chart it seemed that maybe this could continue drifting lower. However, as you can see, it still ended the day inside this pattern, and well, for now we will stick to it, and we'll stick to this pattern. And as you can see, now the pair is trying to make its way higher. However, for now we will keep an eye on this one, on these two lines here, and we would like to see a nice good daily exit out of this little pattern, and then yep, we could consider a further directional move. So for now, be very careful. AUD/JPY. So this one, I talked about this one yesterday. So basically, most of these pairs are going to be the ones that I talked about yesterday. Just a quick update, and I've looked at these on in my trader's tea time, so you can have a look at that as well. But basically, the quick review here will be that AUD/JPY managed to reach our target, the 71.51 territory. It also, as this is what I was talking about yesterday, it also overshot it, hit the 200-day EMA, and came back. So worked out just perfectly according to the whole idea, and it's now currently getting a hold up here. So what we're going to do here right now is now we're going to shift our the upside scenario idea only if we get a nice good break above the 200-day EMA, because as you can see, this area is a very strong area of resistance. But if we get a push above yesterday's high and the 200-day EMA, which kind of in a way coincide, then yes, higher levels could be met, and the next in that case, the next target for us could be somewhere around here, maybe near the low of the 3rd of February, which is around the 72.41 zone. So we'll keep an eye on that one. And as like I said, we're not going to drag this one too much to the upside. Initially, like I said, we will probably, the arrow is not going to fit in here, but yeah, basically that's the kind of idea for now. From the very short-term perspective. In terms of the downside, well, we would like to see maybe a move back below the 70.17 zone. I talked about this one, this area that previously was seen as a good area of resistance, then it took the role of support, and now a drop below this could in a way do the trick for more sellers. Now another thing to mention here, first of all, let's get rid of this downside line because it's no longer valid. The main focus right now will be on this. Let's recycle first of all, recycle this line and use it here. So basically, in other words, it comes perfectly with this this level here, the 70.17 comes perfectly with this idea of a upside support line taken from the low of the 2nd of April. So if we get a break below this, this could also increase the chances of a potential drift lower. So keep your eyes on that one. Quick update on NZD and JPY, also very interesting. It stayed above this upper side of the range, and yep, it drifted higher and hit the 100 EMA here on the daily chart. So this is where it ended the day. Today it's kind of continues to trade just kind of around it basically, but we will basically continue targeting the upside, because for us the main target is the 68.07 territory, which is marked by the high of the 3rd of March. So keep your eyes on this one. In terms of the downside, we would like to see this one falling back inside this previous range, and well, a drop below the 65.91 zone, which is the low of the 22nd of May, could do the trick for more sellers, and we could see this one sliding lower towards the maybe the lower side of the range. However, like I said, for now, be very careful, and yep, wait for a drop below the actually not 65.90, but 65.39 level. There we go. That's the low of the 22nd of May. Quick update on USD CAD. So this one continues to drift lower. Managed to close below this this triangle pattern. So finally it exited this pattern, the descending triangle, and now of course the idea here is that we could see further declines. You can see that yesterday it almost reached one of our targets here near the 1.3734 zone. In a way, for now, we will continue targeting the downside. As I've mentioned before, our main level here, and the main area that we're aiming for right now is this 200 EMA, which currently sits roughly around the 1.3578 zone. So we'll keep an eye on that one. But like I said, this is our main target for now. GBP USD. Here the pair managed to close not only above this barrier right here, but also above the 21-day EMA, or in other words, actually they're both almost to the same place. It managed to close above this barrier near the 1.2296 zone. I talked about this one yesterday, and when I was saying that if we get a nice close above it, then this increases the chances of a potential move further north. Now initially, if it continues to float above this area, above this 1.2296 zone, then the next target for us is around the 1.2467, and if that is just seen as a temporary obstacle, then the next target is this key resistance level near the 1.2650. So for now, we'll keep an eye on that. In terms of the downside, we will take a conservative approach and wait for a drop below the current lowest point of May near the 1.2077. So keep your eyes on that one. And Euronox, something that you probably don't look at very often, but it continues to slide, and it's at a very interesting spot here. It's near this 100 EMA and near this key area of support around 10.8530. Now, by the way, we did get some data from Norway this morning, so the unemployment rate came out, and it came out much better than it was expected, because the previous number was at 3.5%. The forecast was an increase in unemployment of 4%. However, the real actual figure came out at 3.6. So, yep, that's yes, that's worse than the previous. However, that's much better than the forecast. So the forecast was a bit pessimistic, but as you can see, Norway managed to kind of hold on there. So in a way, this could continue pushing the pair lower. And especially if it drops below this 10.8530 zone. So it's currently below it slightly, but if it stays below this area, then yep, the next target for us is the 200-day EMA here around the 10.54 zone. So we'll keep an eye on that one. In case this decides to push higher and breaks above the let's say the high of yesterday here, or even better, actually, let me just adjust this. If it breaks above the high of the 22nd of May, which is roughly around the 11.01 mark, then yes, maybe we could consider a bit of upside here. But for now, we are leaning a little bit more to the downside, so let's see if it can travel all the way here towards this 200-day EMA. And finally, Euro USD. So here the situation is again a little bit tricky, because yesterday the pair came close to the upper side of the range again, overshot it by a bit, and yep, it still kind of closed the daily candle below it. Now, we are still neutral, and this is what I kept talking about, guys, because basically for us to get comfortable with higher levels, we need to see at least a daily close above this 1.0990. For now, you can see that this is not happening, and yep, that's why for now we will remain neutral. In terms of the downside, we would wait for a drop below the 1.0875 zone and then aim for slightly lower levels. However, the slightly lower levels within the range, but as you can see, for now it's closer to the upper bound of the range. So in a way, we are keeping a close eye on it, because if it gets a push higher, if the bulls manage to lift this one above the 1.0990, then maybe yep, it could open the door towards further acceleration to the upside. So keep your eyes on this one, guys. Again, like I said, very interesting developments, but for now we're neutral. So that's it for this session. So yep, guys, today's the economic calendar looks a little bit on the quiet side, if I can put it this way, but continue to monitor the US-China trade tensions, trade wars, and yep, let's see if any new headlines come out from the relating to the coronavirus. So yep, these are the main probably drivers for now, and the main things to watch out in the economy. So guys, yeah, I hope you found it useful. Thank you very much for watching and listening. And if you want to join me later on, my traders tea time is always 13:15 GMT. But for now, guys, I hope you have a wonderful trading day. Stay safe, both market-wise and health-wise. And yep, I'll catch you later at around 13:15 GMT. Thank you very much, and bye-bye.